Hey STRU friends, this is your personal invitation to co-invest alongside me. If you haven't heard, I've launched Stomp Capital Short-Term Rental Opportunities Fund, where I will be personally investing all of my short-term rentals going forward. And if you're an accredited investor and you want instant diversification and you want to participate in the best ideas that I identify, you relate to all of my teachings and the uniqueness and the sense of place and all of that stuff, then please click on the description below and find out more about Stomp Capital short-term rental opportunities. The best is yet to come and we're literally getting started. I would love to have you alongside, so let's go. Hey YouTube, what's happening? It's Richard, founder of STRU and professional fund manager. And today's video are 5 reasons why the short-term rental asset class is mispriced and has a very bright future ahead of it. This is kind of theoretical, and yet it's quite practical. So if you stop and think about it, we're going to be at a very high level, 30,000 feet, macro analysis, but yet the implications are really quite granular, and you can actually do this and take advantage of this opportunity set in this emerging asset class before the institutions get into it. And let me share with you what they're missing and what will actually bring them to this emerging asset class. So the very first one is zoning. The value of short-term rental zoning is currently carried at 0, and yet it should have a premium attached to it. The ability to short-term rent is not worthless. In fact, it carries tremendous value. And yet when you take a look at places that are on one side of a county line that allow short-term rentals and another side of the county line that don't allow short-term rentals, the pricing per square foot is pretty much the exact same, which leads me to conclude that the zoning rights is mispriced, it's carried at 0, and in fact I would say that this type of zoning, short-term rental zoning, is incredibly valuable, and in the future people, institutions, big money, smart money will pay a significant premium for the legal right to operate short-term rentals. So today, go buy as much of it as you can while it's carried at 0. All we have to bet and believe is that in the future it will be worth more than 0. Even if it's worth $1, that's a significant return on your investment. I happen to think it's going to be worth far more than that, which is why I'm so bullish on it and buying as much of it as I possibly can. 2. Vacancy risk is mispriced. Right now, people like certainty. Well, not right now, always. People like certainty, right? Like I like to know that if I do my underwriting properly and I do my credit check and references and so on, that my tenant is going to pay me $1,000 every single month on the first of the month. And if I do that work properly, I have certainty, I have confidence and conviction that I can pay my staff, I can pay my mortgage, I can pay my taxes. And so like I'm willing to accept less money than the variability of vacancy. I have no idea what my ADRs are. I have no idea what my occupancy is going to be. I have no idea if I'm going to have enough money to, make my payroll and make my mortgage payment. So people dislike uncertainty. That's human nature. We need to reverse that and say, okay, well, I actually embrace uncertainty. I embrace risk. Everything is a two-sided market. I'll buy at this price and I'll sell at that price. So when I take a look at short-term rentals and vacancy risk in particular, I drill down, I get a little more granular, and I say, okay, well, fine, I don't like vacancy and I dislike the uncertainty, but how bad is it? What's the reality? And so when you dig down, what we find time and time again, and we have 50-something thousand people in our Facebook group, almost 65,000 people here on YouTube and tons on Twitter as well. The reality is, as often is the case, it's not as bad as the fear. So the fear is dissuading people, it's blocking people, it's making people not get into the short-term rental space when the reality is far different. And here's the reality. The reality is that we're seeing currently between 2 and 3x the monthly income for accepting vacancy risk. So if you were to have a studio apartment with a 12-month lease and that commanded $1,000 a month, that same studio just put on Airbnb or Vrbo or direct bookings and now introducing uncertainty is generating $2,000 to $3,000 a month without any capex. Now, of course, there's more work involved, and so I understand it shouldn't trade at the exact same price as the certain option, but 3x is way off. That's way too much money. We're being overly compensated for accepting that vacancy risk, and this is fleeting, this is ephemeral, this will change. As more capital comes into the space, institutions come into the space, you're going to start to see that yield compression, but the asset should appreciate by more than that. So it's a great time to go long, embrace the vacancy risk. The reality is that it's far better than like the certainty at 1/3 the income. And in fact, what we're seeing right now is institutional lenders embracing that. They're kind of like, I can't really underwrite a mortgage on a short-term rental. I don't know what the occupancy is. I don't know what the ADR is. So I'm uncertain. I don't really like it. I'd rather go underwrite a 12-month lease. Today, we're starting to see some really intelligent institutions, forward-thinking, looking at it and say, well, wait a minute, let me just take a look at the cash flows. And what they're discovering is exactly what I just shared with you. If they like the asset at $1,000 a month, they kind of love the asset at $3,000 a month. And so consequently, the level of underwriting is superior. It's a superior credit risk versus $1,000 a month guaranteed. The vacancy risk, the ADR risk, all of that is just totally mispriced, and so we have an opportunity right now to go buy as much of this asset class as possible before that gets, compressed and it goes away. This is a big one. Some of the smartest people I know are not in the short-term rental space because of regulatory risk. Now, I'm not going to minimize it, it's huge, but I'm also going to say that if you're an investor and you don't particularly care where you invest, then who cares if short-term rentals are banned or illegal in your town, in the neighboring town, in the town across the state line, at your favorite lake, in your favorite mountain house? If you're an STR investor, go find a place where it's legal. And do your due diligence, do your work, develop the skill set, the confidence, the ability. I mean, for my limited partner investors at Stomp Capital, I will buy HOAs, I have rewritten HOA laws, I've worked with the county to redefine certain laws, clarify vague things so that they don't come and bite us in the future. And so I do a lot of activist type investing. I roll up my sleeves, I do the due diligence, I figure out what's legal, what's illegal, what's uncertain, what's not clear, what's not very evident, it's subject to interpretation. And then I do the work and I clarify it and I put it in the law and we run the HOA. And so therefore we create the outcome that we want. We get the regulatory obstacle, not as an obstacle, but as a moat, as a protective moat so that we can operate our business. And so you have to change the way that you think. It can't just be like, well, I want to do short-term rentals everywhere and it's not legal everywhere, and so consequently I'm just going to skip the whole incredible ride. No, do the work, figure it out, develop the skill set, hire somebody, get a consultant, get a zoning expert, rewrite the laws, do whatever you need, invest in a different community, in a different town where it is legal and they embrace your tax dollars, but don't just skip it. That doesn't make any sense to me. One of the most beautiful things about short-term rentals is the optionality. I can rent for a day, I can rent for a week, I can rent for a month, I can rent for a year, I can take it off the market, I can use it myself, I can take it off the market when I'm doing repairs and renovations. All of these things are free options. And in the short-term rental market space right now, that optionality is carried at zero. And if you think about it for a second, that's just totally wrong. And let me give you an example. If you sign a 12-month lease for $1,000 a month, every single month you're cutting that check for $1,000 a month, and if you get another job, it's, you're out of luck. You have to go and pay both leases. But in the short-term rental market, if you signed it, and let's say that they were priced exactly the same, it was a daily lease and you could just pay every single day the exact same amount, $1,000 a month, every single person would sign up for that shorter duration, shorter commitment at the exact same price. So why doesn't that exist? Because that optionality dictates that you should be willing to pay more and the landlord should charge more for that flexibility, right? The ability to come and go as you want and all of that is an option. In math, Black-Scholes won a Nobel Prize for option discovery pricing, and options have value. So in the short-term rental market today, all of that free optionality is carried at zero. We get it for free. And yet it's incredibly valuable, and that's one of the reasons I think that short-term rentals are mispriced as an asset class and will eventually rise. They will appreciate in value as people start to apply well-known mathematical studies like Black-Scholes and optionality to this asset class. The asset class as a whole should increase in value. Finally, and this one's a little bit more, mathematical again, but literally, one could synthetically replicate a long-term lease using short-term options. And what I mean by that is people like the fixed $1,000 a month every single month. And the thing that happens in short-term rentals often is that there's seasonality and cyclicality, and so you have high season and low season and shoulder season, and consequently the income stream isn't really nice and steady. It's not low volatility. You can't really count on it. There's vacancy risk, seasonality, cyclicality, all of these things. But if you understand portfolio construction, literally I can take a little bit of A and some of B and the right proportion of C and add a little D, sprinkle a little E on top of it, and I could literally synthetically replicate that certain income at 3x the yield. So instead of $1,000 a month, I could do it at $3,000 a month. Now, it requires more work and more creativity. I've filmed other videos about what makes this asset class unique, that you need operational skills and hospitality skills and so on. But mathematically, we can literally replicate that certainty at 3x the portfolio, and yet we're buying this asset class as if it has all of these like bruises and things that it should be discounted and risks and concerns and all of that. And the reality couldn't be further from the truth. This is like one of the best asset classes if you understand all of the things that go into valuation, into mathematical optionality, into synthetically replicating portfolios of low volatility income. And so consequently, you know, I stand here, I'm very bullish on short-term rentals as an asset class, not only today, but going forward, but they must be done right. And I've filmed tons of videos about like what you need to do and how to position yourself, videos on what not to do so that you avoid some of the common mistakes. But as an asset class, this is wildly successful, very early stage, not a lot of institutional capital. The future is very bright and the runway is very long. And so consequently, I'm extremely bullish, and I want to share this upside with you and have you think about it in a more rational way versus the fear of, well, it's this risk and that risk, vacancy, regulatory. Yeah, that's all true. But we can put that aside and we can go above and beyond that and do it better. So let me know your thoughts in the comments below. As always, all I ask is that you please like the video and subscribe to the channel, because like, why wouldn't you? Emerging asset class, early days, a lot of knowledge bombs being dropped right here. I want to see you win. I want to see you succeed. I want to share the upside with you. So let's go, friends. The best is yet to come. Hey STRU friends, this is your personal invitation to co-invest alongside me. If you haven't heard, I've launched Stomp Capital Short-Term Rental Opportunities Fund, where I will be personally investing all of my short-term rentals going forward. And if you're an accredited investor and you want instant diversification and you want to participate in the best ideas that I identify, you relate to all of my teachings and the uniqueness and the sense of place and all of that stuff, then please click on the description below and find out more about Stomp Capital Short-Term Rental Opportunities. The best is yet to come and we're literally getting started. I would love to have you alongside, so let's go.